A strong 20-year bond auction in the US sent the US sovereign bonds and stocks rallying yesterday. Microsoft and Nvidia hit a record high ahead of the much expected and the much awaited Nvidia earnings that are due today after the closing bell in the US. Now, investors will also keep an eye on the Federal Reserve minutes that are also due today, which will certainly remind everyone out there that the falling yields in the US are no good for those wishing for a softer Fed. So welcome. This is Swissquote's Daily Market Talk. So we had yet another strong start to the week on Monday. The US bonds extended their rally after a relatively strong US 20-year bond auction, so the US 20-year yield tanked to 4.70% level. Now remember, the US 20-year paper was yielding close to 5.40% back in October this year. The US 10-year yield, on the other hand, slipped again below the 4.40% level, while the US 2-year yield, which captures the Federal Reserve bets, remained steady-ish near the 4.90% mark, having tested the 4.80% support several times since the beginning of November. Now note that the significant fall in the US long-term yields compared to the short-term yields also widens this yield spread across the US yield curve, and the gap between the US 2 and 10-year yield is now back above 50 basis points. So that means that the recession odds for the US economy are mounting yet again, according to the usual interpretation of a yield curve inversion. Of course, that means that investors accept lower yields for longer term US papers as they price in a higher probability, a higher possibility of economic slowdown, hence recession, which also boosts the odds for the first rate cut from the Federal Reserve in a few months from now. And activity on Fed funds futures now hint that there is actually more chance for a rate cut to happen in the Federal Reserve's May monetary policy meeting next year than otherwise. So this is where we are right now in terms of market pricing. The fact that the 20-year auction from the US came right after the US government averted a shutdown, hence they averted the risk of another rating cut from another big rating agency, also explain why the US 20-year auction on Monday was much better than the 10 and 30-year auctions, which were actually conducted before the latest US CPI report, which came in softer than expected and amid the uncertainty of yet another possible US government shutdown. I mean, guys, we are set for a nice end of the year. Santa seems to be knocking on the door this year. Now, I actually expect the Federal Reserve minutes that are going to be released later today to be much less exciting than the 20-year bond auction of yesterday. The Federal Reserve minutes will actually come as a reminder, a sour reminder, that the falling long-term yields in the US were actually a major reason why the Federal Reserve decided to keep the interest rate steady at the latest monetary policy meeting, and the tanking yields today could actually mean that the Fed must stay alert. And it's not only the Federal Reserve. The European Central Bank's Government Council, Pierre Wunsch, also warned yesterday that the bets on a European Central Bank rate cut are actually raising the possibility that the central bank will actually hike the borrowing costs instead of cutting them, just to make sure that the financial conditions in the Eurozone don't loosen before time. But investors are just too happy and too excited these days to listen to these words. Yields in Europe continue falling as well, and that despite the warnings that we see on the falling yields, and stocks continue to surf on persistent fall in the long-term yields around the world. So the Stoxx 600 index in Europe tested 200-day moving average to the upside. The S&P 500 extended gains yesterday to a fresh high since summer, while the rate-sensitive Nasdaq 100 index hit the highest level since January 2022. And remember, right before that, in November 2021, Nasdaq had traded at its all-time high level. So we are really poised for a record-breaking year for the US technology stocks this year. Thanks to, well, thanks to Microsoft and Nvidia, of course. And well, let's admit it, Microsoft was not the most exciting and the most loved of the US technology companies until they hit hard with the ChatGPT at the start of this year. And well, since then, they became investors' darling, really, along with Nvidia, of course, which also benefits from a jaw-dropping and eye-popping demand for its advanced chips that actually serves the AI. And well, you certainly also follow the shaky news from OpenAI since Friday, since the CEO Altman actually got fired from OpenAI. Then he got hired by Microsoft, but he could be hired again by OpenAI as 700 employees at OpenAI, over 770, want him to come back so badly that they said that they would all resign if it is not the case. Wow. So this is how Altman actually went from being a fired CEO at OpenAI to a man that everyone wants to be the CEO and who is actually compared to Steve Jobs today. Steve Jobs, who had got fired at Apple before returning back to Apple, remember, to make Apple the world's most valuable technology company. And well, all this drama actually sent the Microsoft stock price to a record high at yesterday's trading session. And as per Nvidia, well, Nvidia also rallied to a fresh record yesterday ahead of its third quarter earnings that will be released today after the closing bell in the US. So the company will actually attempt to beat its own prediction of $16 billion worth of sales in the third quarter. That's up from $13.5 billion sales a quarter earlier, and that's $10 billion more than the third quarter of last year. But last quarter, Nvidia was also expecting a huge jump in its sales to $11 billion, and well, the sales came in better than expected at $13.5 billion. And it is said that we could actually see a similar positive surprise from Nvidia this quarter around as well, even though the CEOs at the S&P 500 cut down their mentions of AI in earnings call recently. While the gap between the demand and supply for Nvidia's advanced chips is comfortably big and large to allow the company to grow at its desired pace. And Bloomberg Intelligence also writes that Nvidia could surprise the market with a 170% surge in its sales in the third quarter of this year compared to the same time last year. Now, of course, better than expected results from Nvidia could send Nvidia's stock price to a fresh high after the results, but anything less than absolutely fantastic could also trigger a heavy profit taking, as the 500 psychological mark now looks a good and appetizing level to sell in case of a weaker conviction for the company's future sales. The US-China chip war and the US curbs on advanced chip exports to China are actually the major sticky points in the future projections for Nvidia. And in both cases, in case of good or bad results, expect some good volatility in the wake of the earnings announcement of the year's most loved and at the same time the most intriguing company. Options trading actually implies that we could see a positive or a negative swing of around 8% after the Nvidia earnings report hits the ground. But we have already seen big companies lose or gain around 10 to 20% after the results. So fasten your seatbelt, people. Nvidia is due to report after the bell today. Now elsewhere, HP, Lowe's and Best Buy in the US will also expected to report their third quarter earnings today, and well, their sales are expected to have slowed in the third quarter due to weaker consumer and weaker corporate spending. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive feedbacks. I hope this episode of Market Talk has also been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual, and follow us on Instagram, on X and on LinkedIn for regular market updates, and subscribe, of course, to our YouTube channel for daily market comments. And please do not forget to hit the like button on these videos to let us know that you enjoy them. I will meet you again tomorrow, and until then, good day trading.